Good morning. Thank you all for finding time and visiting today's webinar. My name is Agnes and I'm one of the client managers here at Paul & Co. Before we start, I will go through some Zoom settings just for those of you that might be unfamiliar with the webinar environment. So you can select the audio settings here to select investor speakers. You can submit any questions that you've got via Q&A button. We'll answer any questions that you've got at the end of the webinar, but feel free to drop any questions here as we go along. You can, of course, leave the meeting at any time just by clicking this Leave Meeting button. And just to let you know, this webinar is being recorded and you will be able to download the recording from our website. So now we can begin. Our today's speaker is Virish Paul, the director and founder of Paul & Co Chartered Accountants Limited. Hello, Virish.
Good morning, Agnes. Thank you very much for the introduction. And yes, lovely to welcome everyone to this webinar this morning. My name is Virish Paul. I'm a chartered accountant. I have been in practice for almost 40 years. Good Lord, it's a long time. And I am going to talk about something which is very, very basic, but something which 99% of my clients ignore, and now everybody else does as well. But you tell me afterwards what you think of what I'm talking about. But first of all, I'd like to thank everyone for being here, and I hope you will find this presentation useful. Paul & Co is a small firm of chartered accountants. As I said, been in business for over 40 years. We try and get involved in our clients' businesses, deep dive into their financial affairs, and basically help them grow. And today you will hear about our trifecta growth program, which is what the 3 essential tips is about. So let's make a start now that you're here and I am here, and Agnes has done the introductions. Agnes will take the questions on board, keep an eye on the questions for me, and we'll come back towards the end and read out your questions so that I can answer them for you. So please feel free to post your questions as you go along. So firstly, there is, let's be clear, absolutely no magic bullet for business success. It does take hard work, and I'm not going to deny that. But at the same time, it's hugely rewarding. Hugely rewarding to see the improvements you can make by adopting the 3 essential tools I'm going to talk about for business success. Now, I am totally passionate about small business owners to make sure they get the most from their business. It doesn't matter what business you're in. These 3 principles I'm going to talk about apply to all businesses, all commercial businesses. And I know you're all in business for a reason. You probably dreamed about what it would be like. Fancy cars, maybe flash toys, expensive equipment, computers, laptops, every expense tax deductible with a good accountant by your side and no tax to pay. So take a moment to think about what you wanted your business to give you when you first started. What did you dream about? Now, before we go any further, how about giving yourself a score out of 10 for how well that business, the one you dreamed of, has been delivered, or how well that business has delivered on those dreams. Yeah, 10 is 100%. Your dreams are a reality today. So answer from 1 to 10. And don't be shy. Be honest with yourself, because I won't ask you what you have come up with. But what I can tell you is that whatever number you have come up with, it's going to be no different from the number everybody else has come up with. About the same range is what I mean. Because we are all in the same boat. After a while, things slow down and we come to a stage where you are today, like everybody else. And hopefully today will change that for you. So the reason I asked you to do that was so that you realize you are in definitely good company. Being in business can be lonely, no doubt. And what I'd want you to understand that other people are experiencing many of the same challenges you are. And as accountants, this is what we see. And this is why I have put on this webinar for you. So you can learn how to achieve better success in your business. Now, I'm sure most of you are absolute experts at the operational or tactical aspects of your business. But today is in part about reflecting on what you're not so good at. Perhaps that is understanding your numbers, or it could be creating and implementing a simple business plan. Perhaps maybe you need to lead the business and your team a bit better. These are all things we can help you with. Things I felt you can improve because we want your business to serve you and not the other way around. So success isn't overnight, as this slide says. It's when every day you get a little better than the day before. That's when it all adds up. So what are we going to talk about? If you come up with this session with 3 actions that you can put in place in your business, that will be a huge success from your point of view. Because the biggest failure in business is something I call FTI. FTI, failure to implement. So please write that down. Please make lots of notes during this webinar. Of course, you can always watch it again on our website. The reason I say that is if you don't write things down, you won't remember them. So whether you're watching it today or whether you're watching a recording of this, write down whatever comes to your mind, any idea that comes to your mind. Because if you don't write down your actions, they just won't happen. So what I'm going to cover today, first of all, the power of one, the having courage to change, the 3 essential tools, examples of how to use those tools, and then it's accountability time. Yeah, the time when the rubber really hits the road. The time for you to decide what you are going to do as a result of coming along today. Hopefully, I'll show you how adopting these 3 tools in your business can greatly improve your profits and business value. Now, I want you to get the maximum value from this session. So if you have any questions, as I've said, any questions, please type them in the Q&A box. So let's get started with the first point, the power of 1%. Small change can has an incredible impact on your business. Let me tell you this. If you were to increase your sales by 1% each day for a year, by the end of the year, you would be selling 37.8 times more each day. So improving by 1.01% every day for 365 days gives you a 37 times increase, 38 time increase. Or put another way, if you double your sales, it could double your sales in 70 days, just 70 days. You don't have to wait 365 days. To double your sales, you make 1% improvement every day. In 70 days, you find you have doubled your sales. So imagine now what it would like if you increase your sales by 38 times, not 38%, 38 times, 37.8 times. Think about what your business would look like if you could lift production by 1% consistently, or if you could reduce costs by 1% continuously. What this formula is demonstrating is the long-term benefits of continuous improvement. Now, of course, it's unlikely to have an absolute linear way that your sales numbers will grow. The point here is to illustrate the power of compounding growth. Compounding growth. Even if you achieve a weekly increase, not a daily increase, if you were to increase a weekly increase in sales of 1%, how long will it take to double your sales? In 70 weeks, which is what? 16 months. So 1% increase compounds to double in 70 days or 70 weeks. Now let's consider what happens if we don't make these changes. Let's say your competitors sharpen their game, or you fail to keep track of the changes in technology, or you manage your teams ineffectively because you're so busy and start your sales start falling by 1% each day. So if your daily sales are currently 1,000 and your sales regress by 1% every day, do you know what your sales will be by the end of the year? Just 30 pounds. A drop from 1,000 pounds a day to 30 pounds due to regression of 1% a day. So what we're looking here to achieve is continuous and sustained improvement, small changes, not magic bullets. So your sales are unlikely to drop in a linear way like this, so don't be shocked. The important point is, and I repeat this, unless you make continuous improvement, your business performance is likely to drop over time. There's no two ways about it. As Einstein said, compounding is the greatest mathematical discovery of a lifetime. The greatest mathematical discovery of a lifetime. Now, change is inevitable. Change is inevitable. Growth is optional. That's your choice. And we all know this, correct? Yeah. But change isn't easy. Think about the other businesses that haven't adopted to change, and what the impact has been on them. So why change? Kodak became the poster child for companies who failed to react to the changing market. In 1976, Kodak claimed a market share of 85%. They failed to adopt to change. And by 2003, their market share had diminished to 15%. You may not know this, but Kodak actually developed the first digital camera. But being Kodak, they were worried about the effect going digital would have on the sale of camera film, because they were manufacturing films as well for the cameras. And that was their biggest sale, films for the cameras. And their failure to accept that change from film to digital had a massive impact on the profitability. Now, most of us carry a camera around in our pockets, instantly uploading them to the social media to share with friends. But Kodak only released their first smartphone in 2017. They had missed the boat. Let's look at some more examples. MySpace was one of the first social networking platforms and was the largest until Facebook overtook it, and that was in 2008. They failed to adopt to change, kept the same structure, while Facebook and Twitter were updating and adding new features all the time. In 2015, not too long ago, MySpace still had over 50 million monthly users. 50 million monthly users? But compare that to Facebook's over 2.5 billion monthly users. Twitter's over 300 million monthly users. And you can see the effect that failing to adopt to change has had on the company called MySpace. What were Blockbuster? At the height of its success, Blockbuster had over 9,000 stores worldwide. This is another story of a business that had the opportunity to change but didn't see the value in changing at the time. In 2000, when Netflix was starting out with a mail DVD rental service, a mail service of renting out DVDs, the chief executive officer of Netflix approached Blockbuster. He approached Blockbuster to discuss Netflix handling Netflix handling Blockbuster's online business. According to the Forbes magazine, the CEO of Netflix was laughed out of the room by Blockbuster. In 2004, Blockbuster actually set up their own mail DVD rental service, copying Netflix. And when the CEO of Netflix mentioned that Blockbuster had thrown everything but the kitchen sink at Netflix in order to compete with them, Blockbuster had the audacity to send the CEO of Netflix a kitchen sink the next day. Today, Netflix has over 150 million users. And the last time I checked, Blockbuster had probably just one remaining or no remaining store at all. So, having the courage to change. What these examples of disruption highlight is that change is not easy. When we are riding the wave of success as Blockbuster was, as Kodak was, it can be hard to see the need to change. We all have inbuilt habits and behaviors that we repeat. We also have so much going on in our lives that it is hard to start doing something different. This here is the formula for change. It will help you increase your ability to change. On the right-hand side, we have an R. This stands for resistance. When we are riding a wave of success, it can be hard to see the need to change. We all have, and this resistance is what is stopping people from changing their behavior. This can come in three forms: no time, no money, or you don't see the benefit of changing your behavior. So what you need to do is to build up the left-hand side of the equation so that these variables on the left-hand side exceed or are greater than the variable called R for resistance. What does the D stand for? D is dissatisfaction with the status quo. Now you need to understand the consequences of not changing. The consequences of not changing your behavior, which Blockbuster and Kodak never did. What happens if you don't learn how to grow your business or improve profitability? Profitability may drop. You might not be able to take that family holiday. And if it came to it, you may even have to get rid of some of your team members. Then we have vision. We need to have vision. What will your life look like if you do not change your behavior? What do you want your future to look like? What would you like? More holidays, more money, more time with your family? Having a clear vision will help drive you to change your behavior. That's what we're trying to do, to change our behavior. So finally, what are the first steps you need to take in order to achieve that vision? Remember the consequences of inaction. Inaction will heighten your dissatisfaction and cause the business to regress. The fact that you are here today means that you are open to change. So that's a great step in the right direction, if I may say so. The three essential tools I'm going to show you now are the first steps you need to take to start moving towards your vision of a positive future state. The vision of a positive future state. As you will see from this very formula in front of you, your resistance to change has to be outweighed by your dissatisfaction with the status quo and your vision of a positive future state. And you have to take those first steps. So now I will unveil the three tools to take you there. In my view, the three most essential tools for business success are as above: an annual business plan, annual forecast, and ongoing reporting. This is what we refer to as the business growth trifecta. Now, you're probably thinking at this minute, but you knew all about that. So, what's so special? Why are they so special? It's not that they're special, it's that they are essential. And today we're going to discuss how to make use of these essential tools. Because remember, failure to act. A business plan is essentially takes your dreams for your business and lifestyle and transfers them into goals with action and due dates. The plan becomes your guiding document to deliver you the business outcomes you dreamed. Your annual forecast then takes the budget from your business plan and breaks it down into monthly targets with full details of income, expenses, including the tax that has to be paid, the money you can draw out, assets you can buy, and any loans you have repaid. The forecast, in fact, shows you the numbers you need to achieve your desired business outcomes, the goals. That's the business forecast. Now, the third part, the ongoing reporting and accountability, is a bit like, what shall I say, a bit like the relationship we had with our teachers at school. You had a target, let's say, to do homework. You were given a homework to do, which you had to complete to carry on with the next level of study. And at that point, the person who gave you the homework provided you the accountability. The accountability was there as a consequence of not doing the work. And let's face it, how many of us would have not completed a homework if the teacher hasn't asked about it the next morning? So there was accountability. And it's so different in business. Unless someone holds you to account, change won't happen. I'm sure you'll agree with these things. These are definitely essential. So let's now look at the first tool, with the first tool being the annual business plan. Now, there are literally hundreds of books and articles on the internet about the components of a business plan. Here is what I, or we in Paul & Co, consider is the best practice. Number one, your business plan should have a clear purpose. This should be, a 5 to 7 word statement, not a long treaty, a 5 to 7 word statement that explains why your business exists for your customers. Then you need to clearly articulate your vision. What will your business look like in 5 years' time? Articulate that. What do you want to achieve? What does your business need to deliver to you? Remember, your business is there to serve you and not the other way around. State the hours you want to work, the holidays you want, and how much money you want to make. A high level budget, a high level budget in your business plan will help you identify things like your gross revenue, target for the gross revenue for the year, and is based on what you recorded in the, what we want to achieve section above. The budget also forms the basis for essential tool number two, which we'll come to in a minute. And key performance indicators are the things to measure, the things that you measure that will make sure you're on track to your goals. Example could be sales per day, or production per month, gross profit, or even a number of days the team takes to individual to achieve their individual targets. And here I would suggest do not choose more than five, a maximum of five KPIs, and make sure you can measure them. Then you need to identify your opportunities and vulnerabilities. Identify your opportunities and vulnerabilities. You can then you will then be able to draw your ideas from these for your business plan. Your goals should maximize the opportunities and mitigate the vulnerabilities. Finally, your business plan should have your goals for the year. Make sure that these goals are measurable and achievable, of course, goes without saying. Then you should cascade them into 90-day goals with clear actions and a person responsible for each action. Review your business plan regularly, please. Review it regularly to ensure the actions are being completed by the due date. And then update your 90-day goals each quarter. Let's now talk about our rules to develop your business plan. These are the rules we follow when we develop and update our business plan. And we also follow them during our business planning sessions with our clients. Firstly, all key, all key decision makers should be involved in the session. They must also complete what we refer to as pre-work. We send this out to our clients, by the way, a couple of weeks before the session. This ensures that everyone who's going to be on that meeting has taken time to reflect and prepare, and that everyone gets a chance to have their views heard. It also helps us. It helps us identify any areas of, say, conflicting opinions or misalignment, which is quite common. So we recommend using, on top of that, we also recommend we use an independent facilitator. Because if just the decision makers meet to develop the business plan, it's likely there will be a level of disagreement. It's also likely that one or two people will dominate the discussions, and others just will not get the opportunity to have the views heard. An independent facilitator then comes into place, will help you manage these risks to reach agreement. Your business plan should be on one page. Important. Remember that. We are talking now of a one-page business plan. This can be double-sided, but there's no point in developing a 30-page business plan, which you glance over once and then put away. Put away to gather dust. It needs to be visible at all times to ensure it guides your decision making. One-page business plan stuck in front of you somewhere where you can keep an eye on it. And as I said, share your plan with your team and stakeholders. You might need to cleanse it slightly to remove any sensitive information, but your team should know the plan you have so they can buy into your vision and align their goals with yours. Then report against your plans monthly. Yes, monthly. Ensure that your 90-day actions are being completed and you're on track to achieve your goals. Review and update your 90-day goals and actions each quarter. Ensure you're on track to achieve your annual goals. Do a full review of your business plan each year. You must do that. Some things, such as your vision and values, may need to be updated. But do take the time to review each section and update them accordingly. So what will this one-page business plan look like? I'm going to show you an example. And here it is. All components are clearly identified. We like to keep things simple and easy to read and understand. So we got at the top the purpose and the vision, exactly what we want to achieve. And then the value section, that is the value section at the top. And I've put an example there for you. Then we have the high level budget. We update the year to date column each quarter to ensure we're on track. So the annual budget updated year every quarter, and we can see where we're going, whether we're going to achieve our targets. Next, we have our KPIs, the key performance indicators, the ones we'll be measuring. You can see that we've added targets for our KPIs, so we know what we're aiming for. Our ideal client and value proposition are clearly identified, and these should be shared with the team. And then we have our opportunities and vulnerabilities, and our most critical challenge. That is the first page of a business plan. On the back page, we record our goals and action. First, we determine your annual goals. So the example here is improve gross profit to 25%, lift sales to 2.8%. Yeah. Then we break down each goal into 90-day goals. Spell it out here. These goals should be a step forward towards achieving the annual goals. Now, it's fine to have a goal, but what is more important, next stage, the most important, is the actions you need to take. The actions to achieve those 90-day goals. Recording who is responsible for each action and the due dates to make sure someone is accountable is the next part. So this is how we build up our business plan. We recommend setting a maximum of 4 goals for the year. This ensures that you're achievable and have time to focus on each goal. So 4 goals spelled out, split up over 90 days. What action needs to be taken, by whom, and by when. And that is the first tool. Something you will never have seen before and different from the business plans you may have come across. But this is our unique business plan. If you have any questions about the business plan, please write them in the Q&A section, because I'd like to now to go on to the second essential tool, which is the annual forecast. Now, don't wait for the bank to ask for a forecast. Every every business needs to have a forecast. And that includes those businesses which have a positive cash flow, because a forecast can help you unlock a lot of cash just by making a few changes. Now, you developed your high level budget in your business plan. The annual forecast will break this down into monthly targets. These targets will account for seasonability and allow you to and predict and prepare for large cash flow outflows. So let's look at the components of the annual forecast. As with the business plan, there are several components that will make up your annual forecast. You will have a forecast of your profit and loss, a cash flow forecast, and a balance sheet forecast. So what might your forecast look like? The first report is the profit and loss forecast. It measures your business efficiency. And as its name suggests, this report shows you where you are going to make a profit or loss each month. And that allows you the flexibility to allow for seasonal fluctuations in your business, as opposed to lumping all income and expenditure into one annual total. And you may find that although there are some months when you're making a loss, overall, you're going to make an annual profit, or vice versa. It could be the other way around. But you'll be able to see in the month by month forecast a breakdown of the annual numbers you put in your business plan to give you greater visibility, not only about the detail of income and expenses, but how they're spread throughout the year. Now, what is really important here is to understand is that profit and loss, a profit and a cash flow forecast are not the same. Some costs do not appear in the profit and loss forecast. And I might be teaching you to suck eggs, but examples of that are tax payments or asset purchases and sales, loan repayments, and even drawings. So you need to make sure that you're going to make sufficient profit to cover these additional cash flows. This is why we need a cash flow forecast. And the cash flow forecast is that second report. This report shows the movements of cash in and out of the business, again, on a month by month basis. Here, we allow for tax payments, any asset purchase and sales, drawings, and even loan drawdowns rather, and repayments. Now, while the profit and loss forecast showed how your business efficiency, the cash flow forecast shows you whether you have enough cash to survive and thrive. Remember, cash is the oxygen for the business. Cash is king. So you need to have a cash flow forecast to see where you're going to be. And then thirdly, there is the third forecast in terms of forecasting is the balance sheet forecast. Let's look at that. The balance sheet forecast shows you where the overall value of your business or the net worth of your business, whether the net worth of business is increasing or decreasing. It measures your assets, your liabilities, and equity. And importantly, it shows you whether you're solvent or insolvent. Now, highly profitable companies, and we have examples of that, highly profitable companies can and do go broke. So the balance sheet forecast gives you an early warning of risk, in the business. For example, if you have a huge increase in sales, yeah, you increase your turnover, but 38 times, if you like, but you're slow in collecting your debtors, you could be in a position where you cannot pay your bills as they fall due. Cash flow. That's a benefit of a cash flow forecast. So we have three different forecasts. Let's look at some of the rules to develop your annual forecast. Now, there's a lot of different software available that can help you create your forecast. You should be able to do some of it yourself. Easy. Start with your desired profit, work backwards, calculate the sales you need to achieve that profit. Compare this to last year's results. If your desired profit is your desired profit realistic, achievable compared to last year? And then review your figures, make adjustments you need to reach your desired outcome. Again, this is an area we can help you develop your forecast and help you identify areas you can improve your cash flow. So that was tool number 2. What's the third tool? The third tool, as I already mentioned, is the the third essential tools for business success is has to be ongoing reporting and accountability. As important as the first two tools, ongoing reporting and accountability. You need to constantly monitor your result to ensure you're on track to achieve your goals. Now, technology provides you with real-time data today, real-time data which you can compare against your forecast and make adjustments if required. This helps to track your progress towards your KPIs. I'll show you some examples of reporting shortly. The second part of this tool is accountability. Now, you're going to have to make some changes if you want to achieve better results. You'll have to document these changes in your business plan, but the risk is that because life is so busy, you just don't get around to implementing those changes. And this is where accountability comes in. Accountability helps you to set aside time to work on your business and complete the actions you set in your business plan. So, who will hold you accountable? Think about it. The person simply must be someone independent, and they must have the backbone to give you the consequences of failing. They can't be afraid. They can't be afraid to act or upset you when you need a dose of accountability. They need to care about you. They need to care about you achieving your goals you've set yourself. We call this having a coach with a backbone and a heart. A coach with a backbone and a heart. Now, your accountability coach will ensure that you dedicate time to look at your numbers as well as to check in that you've taken the actions you need to take. And here is an example of a report on your actual profit and loss situation, comparing to the forecast we talked about, and you'll be able to track whether you are ahead or behind your target. And that will give you the opportunity to discuss what new actions need to be taken to get you back on track. Then you'll be able to see if your business value is increasing or decreasing in line with your expectations. You can compare your position, the value of the business to last year, and discuss any problem areas or areas for improvement. Likewise, in the balance sheet, you'll be able to see how your cash flow is tracking compared to your forecast and compared to last year. You'll also be able to see what your cash position is going to look like at the end of the year based on the results so far. Then another reporting tool you may have come across, you may use dashboard like a car dashboard. A financial dashboard gives you a snapshot of how your business is currently performing compared to your targets and previous periods. The more often you review your position, your results, the easier it will be to make small adjustments and stay on track to achieve your goals. So, review your goals, your targets regularly. Stay on top of them. So, I have covered so far for you the three basic tools, the three tools that are essential for growth. What, what else have we covered? Remember the power of 1%, which is small, incremental changes can have a massive impact on your business over time. We also saw what happened to a Kodak, MySpace, Blockbuster, just a few companies that have failed to adopt. We just cannot be complacent in business. Change is essential for survival. And then, of course, the three essential tools, which are an annual business plan, an annual forecast, and ongoing reporting and accountability. Please take positive action now to implement these tools in your business if you want to ensure the success of your business. And those steps are in your hand. We can, of course, help you. We can help you implement the tools in your business. Our business planning service consists of a 4-hour session where we will develop a business plan like the one you saw earlier. We can prepare a cash flow forecast for you. Or if you really want to improve the cash flow in your business, we offer cash flow management coaching, which consists of 4 accountability coaching sessions held quarterly. For those who need accountability to make the changes and achieve those goals, we offer quarterly coaching sessions where we update your 90-day goals and actions and hold you accountable to achieve them. And then, as you can see there, we are also able to offer you a complimentary 1-hour meeting to discuss your goals and find out how we can work together on achieving them. This complimentary meeting is available whether you're a client or not. And it's complimentary. That's what it says on the tin. So let's get started. Get started now. Because as I said in the beginning, one of the biggest problems in business is FTI, failure to implement, failure to take action, failure to do it, as has been said. Now, and if you don't write down the actions you need to take, you just won't do them. So that was the other point I made. And so what 3 actions will you take after attending this webinar? Actions that will add value to your business. And or what projects do you need to begin to start solving the problems you have been experiencing in your business? Doing nothing, unfortunately, is not an option. Doing nothing is simply not an option. Remember, the definition of insanity, I've told, the definition of insanity is doing the same thing over and over and expecting different results. Doing the same thing over and over and expecting different results. That is the definition of insanity. So do something different. Do something different. I hope you will do that. And I hope you have gained something from this seminar. We now come to the important part of this webinar, where I am happy to answer questions. And if Agnes is still with us.
Yes,
Thank
it looks
you.
it looks we don't have any questions, Virish.
No questions at all. Lovely. So fantastic. I'm sure everything I spelled out was clear enough for you. And I hope you will go back and not be guilty of FTI. You will actually implement some of the action points you have decided to take with a view to growing your business. If you need any help, we have our Trifecta Growth Program. Get in touch and we will try and help you as much as we can. So thank you for being here this morning. Thank you for the time you've given us. And we are there, as I said, to help you anytime. You please do something different, because doing the same thing again and again is the height of insanity. Thank you very much.